Hello you guys, welcome back to my channel. I'm Alice, I'm 25 and I have about 50K invested as of right now. You never really know, the stock market is kind of all over the place right now. So I have about 50K invested. Today's video is all about my investing. So we're gonna go over my general investing strategy. I'm gonna tell you guys what I do invest in and what I do not invest in. And then I'm gonna show you guys kind of how it looks to actually invest as much as I do every single week. If you're a beginner or if you're a seasoned investor, you just wanna see how other people do it, this is a perfect video for you. Don't forget to subscribe. I love to chat about money, show you a little bit about my life, monthly money resets, budgeting, motivation, payday, routines, all that kind of stuff. So definitely stick around if that sounds good to you. Let's get into everything investing. I'm not a financial advisor. Your investing strategy really depends on your age, your risk tolerance, and your desired lifestyle for your retirement. I have three main tenets of my overall investing strategy, meaning that when people come to me and they say they have an amazing investing opportunity, if it doesn't end up being a scam, or when I'm thinking about investing in something different, I kind of put them through these three filters. So number one, my investing must be nearly set and forget. I am not going to go to your little MLM meeting and try to talk to people all the time about what I need to be investing in. I'm not going to be investing in your fractional real estate. Like, I'm not doing all those things. I literally want to set it, automate it, and then not think about it again. I don't want to have something that really requires a lot of my attention and a lot of my time. I'm not interested in like little indie investments. I find that the less decisions that you have to make, the less discipline that you have to use to invest your money. It really is a zero-sum game when it comes to your money. You have a finite amount of resources. You can either invest it or you can do a lot of good things or a lot of not great things with your money. And it definitely is a decision to invest. And I like to be able to just set it and forget it and not have to make that decision. It's really a one-time decision that you make to bless your life financially over the years. The second filter is that I will not touch the money until I retire. I don't know if you guys watched Love is Blind this last season, but one of the guys, he would day trade the Australian dollar to the US dollar, and that was like his full-time job. When I heard about that, I was like, absolutely not, that is not for me. I want to be able to put it in there and then literally never think about it again. I'm not touching it. I'm not going to try and game the system. I'm just someone who puts it in there. I'm like, see you in 40 years, like have fun, do your thing. And then my third filter is that I do not do the nitty-gritty research on the things that I invest. I leave it to the professionals. I'm not going to go out of my way to read a ton of Motley Fool articles and Fidelity, Schwab, Vanguard. I'm not going to be checking the stock market. I'm not going to be like hands-on doing all this research to figure out what companies are up and coming, what I should invest my money in. If all these professionals in America are like, you should invest your money here, this is the best place for it, I'm going to trust them. You really got to find what works best for you. But with my set it and forget it and then not touch it for 40 years, I really do need to lean on people who have done their own research. But that is the general overview of my investing strategy. Okay, gotta get a little drink. I'm always sweaty when I film. And I'm sorry for anyone who wanted a very like super exciting investing video, because spoiler alert, this is a very boring investing strategy. You're gonna be let down if you want something super exciting. My all-time favorite place to put our money is the S&P 500, and there are many reasons why, but let me just break that down for you real quick. The S&P 500 has a very strong historical performance since it was created. It's had a very consistent return of 10%, accounting for inflation, that's about 7%. We actually had a financial advisor at one point. We've gone through multiple of them. We had one that was investing for us. We were paying him a commission. Turns out he was getting us a lower return than the S&P 500, which was shocking because it's like, that's your job. You can't do better than the S&P 500, which is something that you're going to see really regularly. He would invest our money and then we'd also be giving him commission. So we were making less than the S&P 500, and instead of money going to compounding interest for us in the future, he was taking a commission. So needless to say, we didn't kill him. We just fired him. We both get a financial advisor. Me and my husband, we have our own financial advisors, and what we do is we ask them the exact same questions about our financial situation, and then we kind of pit them against each other, like not like actually have them fight, even though that would be kind of cool. And then we compare their answers to each other and kind of see what each person cares more about, because some financial advisors are way more aggressive and risk tolerant for you, even if you're not. And then some are like a lot more reserved. And so I've had lots over the years where I'm like, wow, that's way too risky for me. And others that are like not really listening to what I want. Okay, the second reason that I love the S&P 500 is that it offers you instant diversification when you invest your money. So the S&P 500, again, always fact check me on this, but I'm pretty sure it's 500 of some of the largest companies in America, which means that it gives you great market coverage. The risk is a lot lower because your eggs are in 500 baskets, but those are pretty decent baskets if you're gonna follow that metaphor. It's not risky in the sense that like if 2 of the companies fail, it's like there goes all of our money, you know? Okay, and then another reason I love the S&P 500 is that it is very low cost. Unlike having the financial advisor in which we had to give him a commission, which took away from our compounding interest, the S&P 500 is very low cost, especially if you go through like Vanguard, Fidelity, or Schwab. And then the last reason we really like that is because it is so incredibly simple to use. It follows all the tenets of my investing strategy. I can set it and forget it. I don't have to do the research on it because it is being done by a lot of professionals and they're deciding what companies to invest in for the S&P 500. And then I also don't have to touch it until retirement. It's not something that I have to like really intensely track, and if it goes up, then I sell, and if it goes down, then I'm like devastated. I feel like it's a very beginner-friendly investment because of how cheap it is and how easy it is to use. Second one that I didn't even really want to mention, but I mean, technically we do have money in it, and that is bonds. So we really honestly have a negligent amount of bonds, or negligible. Yeah, not negligent. I guess I am ignoring them to some degree. Bonds are a way less risky investment that you can do. Again, fact check everything. I'm not a financial advisor. They have a higher chance of returning what you think they're going to, but the return is lower. Wow, that was a horrible way of saying that. They have a more sure return, but the return is lower than the historical average return of the S&P 500. We have a little bit of that, and I think we got it when we first opened our 401ks, and we're like, oh, what should we do? Let's do this target date fund. And then we realized that the target date fund was not as aggressive as we wanted to be. And so someday we will do bonds as we get closer to retirement. The closer we get to retirement, the less risk tolerant we will be. We want a bigger percentage of our portfolio to be bonds instead of stocks. So those will be very important to us someday. I'm not writing them off completely, but as of right now in our 20s, bonds are not really a part of our investing strategy. Alrighty, let's talk about where I do not put my money. Again, you can put your money wherever you desire because it is your money in your life, in your future retirement. But for me, these are things that I just feel like don't really fit the tenets of my investing strategy. So the number one thing I do not invest in is I personally do not contribute money to Bitcoin. In no way, shape, or form am I saying that Bitcoin is not going to provide you with a good return. I'm not going to say that it's not going to take over the world and that money is going to become pointless someday. Like, I honestly cannot tell the future, but Bitcoin does not make sense in my financial strategy. It is extremely volatile, and it's just, I don't know, for some reason I'm not interested in it. I like to trust the professionals and I like to look at the historical averages and everything, and I just feel like for me, Bitcoin does not follow that investing strategy. I like to invest in aggressive, diversified markets with a historical return, and Bitcoin just isn't showing me that. I also think that part of the reason Bitcoin is not for me, and this is just like not an investing thing at all, but when people online that are like super investing bro types, or if anything seems scammy at all when it comes to Bitcoin or like any sort of investing thing, I'm like, okay, I am automatically don't trust this. And that's kind of how I felt about Bitcoin. I personally am unable to emotionally detach the people who are like, Bitcoin's gonna take over the world, your money will be pointless, to me being like, that's a good financial strategy. So I'm not saying that it won't give you a good return. I'm just saying that for me, because I want my investing to be very low stress, low cost, low involvement and energy, Bitcoin is not for me. Okay, the second thing I do not invest in is single stocks. So when I first started investing, I actually only invested in single stocks because I didn't know what the S&P 500 was. And I'm not mad at myself at all for doing that. You have to start somewhere. But yeah, once I learned about 401ks and S&P 500, I was like, you know what? This is not for me. It does not follow my tenet that I let the professionals make the decisions for me. Again, I'm not going to be reading articles. I don't want to be hands-on when it comes to learning about companies, learning about new technology. I do not want to be the one to decide what stocks I invest in. That's why I do the S&P 500. I let the professionals take care of it. For me, it's also too volatile. I hate the fact that I could check the stocks and it'd be like completely different. Is the S&P 500 going crazy right now? Yes. Did I just check my investments and there was a big dip? For sure. I know that I love certain companies. Lululemon, Costco, Nike. Well, do I really like Nike? I mean, yeah, I do. But I don't own a single Nike thing, I don't think. There's companies that I do love, but I don't want to ever invest in a company because I love them and I love to buy their clothes, because that doesn't always translate to a company doing super well on the stock market. So I feel like when I was investing, I was like, oh, I remember that company, like let me invest in them, or I like this company, let me do that. And I just think because I'm more of an emotional person, very in touch with my emotions, that it's just not for me. It is not a set and forget. It's like a invest and then, oh no, what's gonna happen? Like, let me watch it really closely. So again, not saying that you can't make a huge, massive return on these kind of things. Individual stocks, a lot of people have become extremely rich off of investing in single stocks, but for me, it doesn't follow my investing strategy, so it's not for me. Okay, the last thing I wanna mention is that I do not invest in real estate. So yes, my husband and I, we do have a single family home. People sometimes talk about primary residence as an investment. I mean, people talk about everything as an investment. I'm gonna invest in my health by getting this gym membership. I'm gonna invest in myself by getting clothes. I'm gonna invest in myself by getting an education. Yes, all of those things are investments in some way, you could say, like if a loose sense of the word. When it comes to actual investments, money that someday I hope to cash out to live off of. My primary residence is not that. My primary residence is a place to live. And I have talked to many people who are like, the price of my home and how much I was able to sell it for was amazing, but most of those people sell their house so that they can buy a bigger house. So I'm not saying that the price of your house is completely pointless and it doesn't matter if you own or rent or whatever, like you can do whatever you want. I'm just saying that we live in a house that we pay a mortgage on, which means that we pay a premium for certain benefits. Like we do not have to sign a lease. We do not get any sort of like weird security deposit taken away. If our landlord's niece wants to rent something because she just got married, they can't kick us out because this is a house that we have a mortgage on. Mortgage is a lien on our house, but it doesn't mean that the bank can just take it whenever they want. So we pay a premium for that. It's not an investment for me in that sense. It's an investment in my lifestyle, but not in the sense I'm gonna cash it out and live off of it. Also, just don't invest in real estate in general. I wanna be hands off. I wanna set and forget. I don't wanna touch it in 40 years. Like I just prefer the stock market over investing in real estate. Alrighty, now we are gonna go to what it looks like to actually invest on a day-to-day basis. This is kind of like my trickle down. Oh wait, no, that's a charged topic. This is more like my steps of where I put my money, like in a flow chart. The number one place I put my money is my employer match. That is the company 401k, where the company will also contribute money to that if I put in money. I genuinely believe that the employer match is one of the best investment tools or strategies you can use to really maximize your returns. Say you invest 10% of your income and your company is willing to match that 10%. That is a 100% return on your investment before it ever even hits the market. So I think it is such a good idea because it is the company's money that they are investing for you. Even if you can't put that much in, that they'll like double it, or maybe they'll do like 50% of how much you do. It depends on what your company does. The only caveat with this is vesting periods. So a vesting period means that you have to stay for a certain amount of time in your company before the company's match is actually vested. My last job I left and I was only 40% vested, which means that I get 100% of my contributions, but only get 40% of my company's contributions. I thought it was worth it because I make so much more money. I have half the commute that I had, and it's just a better fit for me overall. But my net worth did take a little bit of a hit when I lost that money. My current job vests immediately, but their match is way lower than my last company's. So it really just depends on what your company offers. It could be anywhere from like an insane investment that they make on your behalf. I know some people who work at places where they don't even have to put money in and the company invests for them, which is insane. And then I know other people where the company gives them like 2%, which is not very high, anywhere between those things. And then some companies don't offer it either, which kind of sucks. Actually, another benefit that I forgot about that is probably like one of the best is the fact that it invests money that never even hits your bank account. So when I first got my job, I was not able to invest yet. I had to be there for 3 months, but then afterwards they started taking money out of my account, and I've honestly forgotten how much I used to make because that money just doesn't even feel like mine. So that's the ultimate set and forget, where if I invest through my employer's 401k, I genuinely don't even know that that money's gone. And that really makes investing sustainable. The less choices you have to make, the less decision fatigue you have, and the less discipline that you need, a way to support your retirement in the future without having to use a lot of mental effort today. The second place that we put our money after we max out employer match is automating our Roth IRA. So this is super exciting. This year is the first year that we are maxing out our Roth IRA. We've decided to take the yearly contribution limit limit, divide it up weekly, and then we just invest that amount every single week automated. I mean, when we first started doing it, it was honestly pretty tough because we went from investing, I think, $100 a week as a couple to $288 a week, which is quite the jump, but I'm really glad that we just tried it because then our life has molded around it and it's become so easy. I don't even really notice that that money's gone, which is wild to say because our expenses used to be more 70 to 80 to 90% of our take-home pay, which is really intense, but we refinanced our house, we got promotions, we graduated, and so it's been a lot more easier, so we're able to automate it. Before, when our fixed expenses were so high, we could not automate it because we were worried about overdraft fees and we just honestly couldn't really afford it at that time. So this has been so amazing, and it's almost like the 401k match, except for it hits our bank account and we see that money and we might get a little bit attached to it, you know, form an emotional connection with that money, but then eventually it goes on automated. I don't have to think about it, no decision fatigue, which is super nice. Okay, the last place we put our money is brokerage accounts. So there is a limit on the Roth and traditional IRAs. Changes, I feel like, every year. So definitely make sure you're up to date with what it is. You can only put so much money in there. And we feel really good about automating our 401k contributions and then automating our Roth IRA contributions. But when we have extra money and we want to push ourselves one month, then it doesn't quite follow my investing strategy, is because it is a manual transfer because we don't feel ready to automate it yet, since we do it when we have the opportunity to do so. It is actually way harder. You have to log in, and it's just, I feel like these companies that you invest through make it so they don't want you to invest because the user interface is so bad. We have to manually transfer it into the account. It takes a couple days for that to happen, and then it takes a couple days for us to actually like buy the positions that we want. So it is definitely a much longer process, and I prefer automation, but this is when we want to push ourselves, when we have an opportunity to invest a little bit more. Still very proud that we do that, but this is not as sustainable of a way to invest unless you are super good at that kind of stuff, you're very comfortable with the websites and everything like that. So if you are just starting out your investing journey, or you're a seasoned investing person and you just want to see how someone else does it, I hope that this was a great video for you guys to show how a very normal person invests in a very boring way but gets consistent results. I feel very good about our retirement. I feel like we're doing a lot, especially by the age 25. I know that I have had some comments where people have much more money invested by age 25, but 50K has pushed me, yet also been reasonable for me to enjoy my life now. Remember, it is very important to stay up to date with tax laws and investing limits, and having a couple of financial advisors has definitely helped our investing strategy for us to find the best thing that we can do with our money. Thank you guys so much for joining me today. I hope you have a great rest of your day.